Good evening friends, welcome to the last video of these demo sessions. So I will proceed slowly and just cover today the way it happened. First of all, before we start, I want to go back to yesterday's closing bars and I will show you something interesting. Let's go to the bar replay. This was 3:15 yesterday. Now at that point of time, your index was somewhere around 650, right? So this option chain analyzer which you see here, this ATM was 650. Now when you are using the OCA, try to keep the ATM reference normal. Now this does not change automatically. TradingView, there is a lacuna that strike ATM is not selected automatically. You have to put it manually. As long as it is within 100-150 points, your choice of ATM actually does not matter. Anyway, what I wanted to show you was yesterday in the closing bars, the option chain analyzer turned bullish. Now on expiry days, you will see quite a large number of days where that expiry's option go up, turn bullish, but the monthly does not change. But the monthly yesterday changed to bullish. So today morning we were expecting a bullish up move if market started just running up a bit. So let us come to the first bar of the day. Okay, this was the last, this was 320, this was 330, 320 to 25, then 330. So if you see this particular point, monthly option chain closed strongly bullish yesterday, correct? So today morning when the market opened, our expectation was that the option chain was showing so much bullishness. So if market went up above this 730 range or something, the upper AVWAP, this could probably run up. Let us see what happened. First bar, it is picking up, that volatility will go up. You are in an expansion. I will just change it a bit. Forget this. Okay. So notes is basically this one will come if you are on, basically I have just changed it so that you get, okay, I will just give a second. I will use the normal one so that you can see what is going on. Yeah. So the first bar was basically mixed signals, monitor closely. This was neutral. Obviously 920 we do not have a trade. This is the second bar. This bar is 920, means this is 920 to 925. Now it has crossed this upper AVWAP. Let us just put this up. Yes. There is no signal out here till option chain. After the first bar jumping up and down, it has turned bullish. But again, we will not take a trade at 925. We will wait till 930 as per our rules. Now this is 930. If you go to this bar, you will see 925 written. TradingView bars are, the time is basically the start of the bar. Okay, so 925 actually means it's 925 to 930. For example, if you see the first bar, it comes at 915, which means it covers the time frame of 915 to 920. So this is my 930 bar. What do I have here? Regime is expansion. This is bullish. Your option chain is also bullish. So I go long out here. If I go long at 24,737, my stop loss will be here, 24,682, which is the middle yellow line. More confirmation, bullish with strong expansion regime, high momentum and persistence. I have got it and it is going up now. Yes. Yes. Now remember, this one is strongly now going up. This one is also bullish. Okay, by this time we are up to 24,800. It will remain the same actually. As I said, within 100-150 points it doesn't change. If it's like 1% up move, 200, 250 points you see moving, then you need to change the ATM. So normal market 100, okay, still going strong, bullish with strong expansion regime, high momentum and persistence. We entered here around 740, we are already up to 850, 110 points. There is no risk out here, it is not telling you to become, okay, now comes this. Bullish expansion, slowing momentum, look to tighten stops. What did I teach you yesterday? 2 bar low becomes your stop loss. Your stop loss was originally here, 747. So if you follow the yellow line and if it comes down and hits your stops, you entered at 740, you got out at 747, 100 point left on the table. But if you get out here at 805, at least you have got around 60, 65, 70 points in, right? You are not going to exit here. It is not asking you to exit. This one is still bullish. This one is still bullish. Let us see. Look to tighten stops. Stop goes up here because these 2 bars, lowest of 2 bars is here. After this bar is complete, only then I am putting the stop loss out here, right? Price is here. Mixed signals, monitor closely. I am keeping my stop loss here. Now this one, what it is telling you is that this move is probably ending. So this bar, I exit my trade because this signal is gone, right? So I entered at 740, I exited at 820. So it is like around 60 and 20, 80 points safely. What happens after that? See, if you did not exit, you would have left like 860, sorry, this is 120 points. This was at 740 and you exited at around 860. So 120 points in one trade. If you did not exit, you would have got stopped out at 820, 40 points left on the table, but our system exited perfectly at the top. Now remember one thing once again, yesterday I showed you that the background color is another level of confidence. So this background today is totally green. So this is actually bullish. I am not looking to short. Okay. Okay, now there is no signal on the vol quant, correct? But if you have the option chain analyzer, this is again showing you this option chain. It became a bit neutral, then again strong bullish. So if I buy out here, why I am taking this trade? Because this correction is there. There is a pullback to the main trend. We have come near the yellow line in the middle, which is considered to be a support above which we are bullish. And if I buy this at this closing, which is around 820, your stop loss is 771 or 770. So 50 point stop loss I can risk and I take the buy. Going strong. Okay, the price out here is 920. Now I will exit out here despite everything remaining the same. Why? When you will get in the course, you will see that these particular buys, this trend buy or pullback buy, when we buy at say 820 and we have a stop loss of 770, you have a stop loss of 50 points, right? So our logic here always is, if we get 1:2 RR, that is if our risk is 50, and if we get 100 points on the trade, we exit. We do not wait for the trade to continue. Number one, common sense, market started from 650, you're up to 930. So almost 300 points run has taken place. Market doesn't run up 500 or 600 points in a day, maybe once a year, not every day. So every day if you get a 1:2 RR, that's enough for you. Get out of the trade and go home. Goes up a bit and fine. Now you may ask, this trade came into the picture out here, correct? But I entered here only. So this is not a trade I am going to do for again, because this trade is already being continued. Now the congestion has started coming in. Okay, this particular buy, will I take this buy? You might ask, boss, this was bullish, fine. But here I am not getting an expanding probability sign, rather this compressing probability is telling me chances of trade are less. Common sense, again 300 point run up already there, I am not going to look for a buyout here. Will I take this buy? No, because this is red, this is neutral. So this is also not a buy I am going to poke. It might seem you would have got money, but I will suggest don't take this trade. Again, this is hitting the upper AVWAP, and as I showed yesterday, whenever upper AVWAP after such a move gets hit, there is a supply coming in. This one is still bullish, this one is neutral, but this is not somewhere I am going to poke. Simply because there is a lot of supply which will come in at the upper AVWAP. See? When there is a strong move, this particular AVWAP will become light, like this. Here see the AVWAP is continuously being solid. There is supply. Same story, this buy not to be taken because this is red and you are already in a congestion. Whatever signal comes out here now, bearish, compression, possible min revert, forget everything because you are in yellow, you are in a congestion zone. You are not supposed to trade out here. Day ends. So today we actually got two trades. One was this, one was this. This particular point, I don't know whether you traded this or not. If you did trade this particular zone, you would have 100% lost money. End of the day, it seems easy. This goes up, it comes down, I buy here, goes up. But if you did trade this, you would have lost money. So more than in this system telling that it gave you two right trades, I will guess the bigger portion is it asked you not to trade in this zone. Because retail traders, what happens is, in my experience, and I have students in this course who make money in this move, then give everything back in this chop. So if you are a day trader, my advice is do not become an unpaid servant of your broker. Your job is to take these two trades, then if you get everything combines, maybe that one, that's it. And if you are day trading the indices, you are doing options trading, I will suggest look for 2 to 3 trades in a day, not more than that. If you are trading 20, 30, 40 trades in a day and paying 20 rupee per trade as brokerage, you are an unpaid servant of your broker. Please don't do that. And it gives a very bitter taste in your mouth if by this time you see you are up by 1.52 lakhs or 20,000, whatever your capital is, and by this chop ends, you give everything back and something back from your pocket. It happens to everyone. It happened to me when I initially started out, and after that I realized that getting good trades is better. Now if you do some kind of money management, if you have a target per day, then if your target is met, here also you can shut down your terminal and just go home. So this was today. So today was basically easy. See, any trading system, when people talk about back tests, I can show you n number of back tests which are extremely good. But what matters is how the system performs in real time in forward data. That is, when the market, you do not know how it will behave. The reason I started a demo from Monday is I could have shown you back test over the last 5-6 months, how this has performed, how Quant has performed and stuff. Even after those back tests, the moment you start trading, maybe the first day or the second day, you suffer losses. For example, yesterday we had a trade which was a loss in the morning, correct? So you wouldn't have got confidence, but seeing a demo running live on live markets, giving you signals, whether you take the signal or you observe it is a different story. But if you watch those signals, then this is something you should actually look for. So this brings us to an end to the videos on a regular basis. As you can see, the demo offer is on. The course is normally priced at 24,000 plus GST, it is 28,320. If you use the code DEMO48, this is the link, the course will become 12,000 plus 2160 GST, that is 14,160. Now please remember, if you are using free trading view, you can use maximum of 2 particular indicators on a chart. Okay. If you need to use these 3 indicators in the setup which I have taught, and it is also there on the site on the different videos, you will need some form of basic paid trading view subscription. Now this OCA will work on Nifty stocks and Nifty futures, and also Sensex options, that is when you're trading BSE Sensex or BankX. It will not work on commodities, or if you are trading US stocks. If you are trading something like commodities or US stocks, let us say you are trading S&P futures, you have the AVWAP, you have the vol quant, but what you do not have is basically the OCA. So what I will suggest is, using this QuantGym OFA which comes with your course. Now in this is for example, the OCA actually use options data, and this is actually order for analysis of that particular futures. It's a pseudo, I would say, option chain analyzer. So in the course we have detailed videos on what parameters and stuff to use. For example, this particular thing which is there has a default time frame of 30. Do not change this 1 minute whatever chart you are using. That is, if you are using a 5-minute chart, keep it as 1 minute. Don't change this lower time frame. Okay. Regarding the sum look back, again this has been dealt with extensively within the course. We have very specific videos. Now I have 2 OFAs. So this one is 30. What I will do this, let's say I'm a bit of a short-term trader. I move this to 10. So there it gives me a different set of signals. There what happens is, the way we look at this is, say this place. Here what happens? This is your AVWAP. I will just do a screenshot software so that you understand what I am looking at. I am looking at this portion. Okay. This particular bar has broken through this lower AVWAP, which is bearish. The background color is red, neutral, bearish. So there is a bearish zone which is going on. This is bearish. If I look at this now, the 10 period OFA, the vol quant, it is giving you a bearish signal. The 10 period OFA giving you a bearish signal. The 30 period longer term giving you a bearish signal. So we short around here. Your stop loss is this middle bar. In terms of prices, this will be 58.40 and this stop loss will be like 58.50. And this just cracks down to 57.60. This is S&P futures, the most, S&P minis actually. This is the most traded futures contract in the world at any point of time. So these are the kind of basic rules. Again, we have detailed videos on the site covering all this. So if you don't have the option chain data on TradingView, OFA is a substitute. Or example, let us say I am trading gold on MCX. Same thing, bullish, expanding. This one is bullish, 10 period, this one is bullish, 30 period. Let's say this bar, because here we have broken out of the AVWAP. I will just take this buy sells off so that the chart becomes okay. As I showed you yesterday, you can just put this off and then also trade with the indicators. There is no issue, rather the chart becomes clear. So let us say I am on this bar on gold. I see that AVWAP is getting constricted. This in the course you will learn that when AVWAPs behave like this, and if you are into basic technical analysis, you will get this. This is actually a triangle which is being formed. There is a compression, which means market will break out in one direction now. Now in this particular bar, we see this is a buy signal on your vol quant, green. This is buy, this is buy. So I buy out here. Somewhere around 95,850. Your stop loss is the yellow bar, something around 95,750. And this continuously goes up. Where do you exit? This is the bar where this trend indicator on your vol quant goes to 0. You exited this bar. Fair enough? So, with this suite of indicators, you can trade NSE indices, NSE futures. Somebody asked me, can I trade NSE cash? Obviously, you can trade NSE cash. Let us say you are trading a stock which is just in cash. I don't trade cash, so I really don't know any name. Anyway, take for an example, let us say ITC. The only way I go back to ITC is because it's a favorite stock of mine anyway. So this is ITC, and let's say I don't have the OCA out there. I just have this vol quant, and so this is today morning, broken out. Vol quant gives you a buy. You can buy ITC cash as 431. Your stop loss is like 429. Goes up. I mean, I seriously don't trade cash, so I don't know the names of any cash stocks which get traded heavily. But cash stocks can also be traded with this particular combination. This OFA you might need to adjust a bit depending upon which stock you are trading. And going back to the basics. Yeah. So this is how everything goes. And as I said, if you are going for the course, you will actually get the AVWAP, the vol quant, the order flow analysis, and the option chain analyzer. In the site, there are 22 videos as of today. This will be the 23rd video. A lot of them are theory videos, some of them are practical market analysis videos, expiry day videos and stuff. And from time to time, we upgrade the indicators or upgrade the videos. We put in something new, we learn something new, we always share. So, two major points. If you are going for the subscription, use the discount code for a 50% discount. To use all the indicators in one chart, you will need a paid TradingView subscription. A free subscription, you can use only 2, so you'll have to rotate through the indicators. That's it, motamoti. So if you have any questions, the site has a question answer box, is a chat box. You can ask me any question. I will answer after market hours. Last but not the least, I will not give you trades. I will not give you suggestions what to trade. During market hours, if you ask me, this is my trade, what should I do? I will not answer. There are very specific SEBI guidelines for that. If you ask me a theoretical question post market, this is what happened yesterday, day before yesterday, this is how I would have tackled, I will definitely answer your queries. You can ask me through the chat box, you can email me, both of ways, the query will be handled. The subscription is valid for 6 months, the 12,000 plus GST which you are paying. After 6 months, you will have to renew the subscription if you are interested and if this is serving you well. I believe it will. So that's all for now. See you later. And whether you subscribe or not, I wish all of you the very best in trading, and I hope you make money from the markets. Thank you.